Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group with your weekend video update. And happy almost 4th of July. Today's the 2nd, tomorrow is the 3rd, and U.S. markets are closed early at 1 o'clock. So I would expect a lower volume day tomorrow, and as we get into the holiday on Tuesday. But keep in mind, if you are trading Monday, I will be trading as well tomorrow. I'll be on vacation a little bit towards the end of the week. So I will be trading tomorrow. I would expect again lighter than normal volume, but sometimes on these lighter than normal volume days, sometimes you do have some trading opportunities. There could be some big moves in some areas. So I would just if you're trading, watch, pay attention to the tape, pay attention to aggressive option activity. There might be a couple chances or opportunities in there tomorrow. So just to kind of get into what we saw last week, we saw further cooling in tech and a bit of rotation going on into banks, steel, energy, and retail names. Those names outperformed last week. One thing that I see interesting up here, pretty much kind of flat-ish, for the major indices. S&P was down 55 basis points last week, but the Qs, which were up 2.4% the previous week, gave it all back and then some. So we're going to go through the Qs technical charts. Why do I want to go through the negatives first, or what kind of underperformed last week? Is just like really good traders will always worry about the risk first, and they'll worry about where they can lose money. I think it's appropriate to kind of look at some of these areas that are teetering on breaking down, especially because they are bigger weights in the overall market. It's a little bit different when we saw, energy break down months ago and break below the 200-day moving average. Energy is less than 10% of the S&P. It's really not going to affect that much. Is it going to, cause a little bit of a move, a little bit of a weight down in the S&P, sure, but it's not one of the major, largest sectors in the S&P. So I think it's more important to kind of notice and be on the alert for what is going on with technology right now. So I don't mean to worry anyone. I just want to focus on the things that could go wrong first, and then we'll talk about some things that are moving up here towards the end of the video. And I've got a couple surprises in here in this week's video, but. So first things first, a few observations. This week, it is end of the first half of the year, right? So kind of makes sense to kind of look at some overall numbers. One of the things that, and I'm not going to go through all of this year's performance. There's plenty of data out on that and plenty of posts on that. But there's only a couple global markets that are down year to date. Everything else, I mean, it's pretty rare. I think that for so many global areas to be participating in this rally. So that's why I really think that it doesn't get as much coverage as it should be. When you turn on financial media, they'll always will talk about the U.S. market, and sure, it's important. The U.S. market is always important, but to completely ignore what's going on around the globe in terms of the global rally, as it is what it is, it's a global rally. This has been very rare and something that we haven't seen in a long time. So it's not just all about the U.S. I think it's really about the global rally. But let me move on, because there's a lot of things that I want to cover here other than what we've seen in the first half of the year. Keep in mind, ETF inflows have been running at for 2017 and in years past just at a huge clip, right? So for the first half of the year, there's been $172 billion, B with a B, B for billion, sorry, inflows into going into ETFs this year. So that run rate is about $6.8 billion per week. Why do I bring that run rate up? Because it's kind of interesting what we've been seeing the last 2 weeks. There's been outflows the last 2 weeks. So it's been total right around $10 billion of U.S. equity outflows the last 2 weeks. So this is also, one of the reasons why the market has been kind of like in a little bit of a lull the last 2 weeks. There's just not, new money has not been being put to work the last 2 weeks. Now, if I think this trend is going to continue, where we're going to continue to see inflows, it could be a buying opportunity. This happens from time to time where there's a weekly outflow in equity ETFs. So we've in the U.S. So we've got 2 of those weeks in a row. So let's see if that turns around this week. But I do want to mention, because a lot of times people try to come up with all types of reasons. Listen, there's just not new money being put to work in the market in the last 2 weeks. There's also been some large systematic events for the last couple of weeks. Again, I think a lot of people that are talking in financial media they talk about rotation and some of the underperforming areas being bought and some of the winners being sold. This is very mechanical in the last couple of weeks. Index rebalancing, right? This is not somebody basically saying that they're actively pushing money out of, well, they could be doing that as well, pushing themselves out of some of those winning sectors, but it's also very mechanical in what's been happening the last couple of weeks. That happened in the Russell rebalance, that happened in the S&P rebalance a couple of weeks ago. So there's some legitimate reasons for why we've seen some winners being sold and some of the underperformers being bought. But it is a very temporary event, and it's all in the past. Last week we also saw, I think, quarter end flows kind of weigh on the market a little bit too, in that rotation theme. So again, the reason why I bring this up is not to go over past events, but just to kind of mention these are all now complete. So these mechanical systematic events are done with. So we have to kind of digest and see where we are in terms of support and resistance levels. I talked about next week being a holiday week. I'm going to talk about the VIX as well. Every time the VIX has, over the last couple of weeks, has gotten to, around that 10 level and dipped into the 9 level, has been I don't want to call it a warning sign, but it's been a great place to take profit. So keep in mind, I think the VIX last week, what did we close around the 11 handle, I think, which is good. Yeah, 11.18. So, we've got a couple of these crazy looking bars from last week. I think 11 for this environment is still low, but it's not danger. It does below 10. I think is where you want to be cognizant, because we've had some snapback volatility right around that level. So be concerned if we start to get below that level again. Okay, so I'm going to go through a couple of points here in the Q's technical chart. Number one, just kind of looking, and let me zoom in here a little bit more. But you can see this area that I've got circled, right? These are value areas that I have from month to month in the daily chart. One thing that you've noticed is, basically since December, from the last time that tech sold off, and we saw a rotation into financials, into some metals names and industrials. Defense names, tech took a breather, right? So that was the last time that tech took a breather. Since then, the value areas have been moving up every month. You get a higher value area here, you get a higher value area here, higher like steps. Then all of a sudden we kind of paused here for a month, and then this was May, and then June, you get a big gap up in the value areas. So, we could have pushed a little bit too far too fast. So we don't know if last month, the month of June, was basically just digestion of a move that happened too quickly, or it's a topping pattern. And I think that you want to look at this objectively. In the past, these dips have been bought. We have broken the 50-day moving average, so you want to be cognizant of that, because that's now going to act as resistance. We're also going to open up July, if I could get this to work right. And let me just move over. We're going to open up right at the bottom of value. So we're at a crucial, I would call it a pivot point. Let's see what price does here, right at 137.64. And if we start to drift lower, I think you have to wait for price to kind of regather and get back into this uptrend. If we open up and we start to go higher right away, reclaim the 50-day moving average, I think it's a great dip to buy. but we're not there yet. There's no buy signals. You could kind of look at the MACD, you could look at stochastics. We're not seeing a swing long setup there yet. So I think the bottom line is you want to be patient and you want to respect some support levels on the downside. The 100, this is not the 200-day moving average. I actually changed this to the 100 because that comes first. So if we start to break further down, I would watch for 100-day support. If we break further, I would say we've got a problem on our hands. We've got a lot of virgin pointed controls down here. These are these purple lines that could act as magnets and could be where price ends up getting. But again, let's stay objective here and let's see, first things first. We're right at this decision point. Let's see if we continue to if we rally here, that will be the new support, and we could continue up in this uptrend. If not, I would be cognizant of the support levels that are down below. So that is my analysis on Qs. I also did some analysis on the semis. Why the semis? Because semis have been really one of the best performing groups over the last year. The SOX index is up 51% over the last year. So really, really strong performance. The other reason why, I think it's important to watch these market leaders and to see if they're breaking down or if they're just kind of pausing in trend and maybe moved up a little bit too quickly, right? So that's number one. Number two is that semis can also be, in my opinion, a leading indicator. Sometimes they kind of show what the whole move of the market is going to be next. We've seen that a couple of times in years past where semis can lead a market move. So that's also why I think it's important to watch this chart closely. So if it breaks further, if we start to break, this one has and again, you go back to the Qs chart where Qs are going to open up right around the bottom of value. Semis have already looked like they're going to open up below value for the month, which again is not the best sign for the bulls. So that level to watch in the semis, if we can reclaim it in the beginning of next week, which would be wonderful, which would be 82.69. On the downside, same thing as the Qs, I would watch the 100-day moving average, because you do have, if you break the 100-day moving average, you've got a lot of these purple lines, again, which virgin point of controls, where price has gotten away from and moved quickly through some price levels. If we start to break below value, they can often act as magnets. The other thing that I noticed last week, a lot of short-term buying in SMH. So I'll show you the 5-day for SMH. So the one thing that's good about this is I don't see a ton of put buying going out other than this looks like this August trade, or excuse me, the September trade. There's a lot of, if you look at all sweep transactions, your aggressive options, most of everything was July. So just in a couple weeks. So somebody was looking for, and they did this, I believe it was earlier in the week. Some was Thursday, that's not early, but Tuesday. So, some of that volatility has already been fulfilled. But this was aggressive. This was, over and over, we saw puts go up 4,000, 3,000, 2,000. But mainly there were some August puts mixed in here as well. But the majority of the transactions were July. So again, short-term volatility somebody was looking for. Not every trade, but the majority of those trades were July. So my bottom line, which I put in every weekend newsletter that subscribers get, you want to remain objective here, and you don't want to let your personal opinions. You see so many people on Twitter talking about politics, talking about their personal views. Price is king. If you're straight technical analyst, price is always, or a trend trader, price is king. Don't let these your political views get in the way of trading. I see the mistake on Twitter all the time. People will say, "Oh, this is that, and this is this is going to affect that," and there's greater things going on in the world besides politics. It just is what it is. It's noise, in my opinion. So watch price. So again, I stress this technology. It's a big weight in the S&P. If it breaks down, it won't be a good sign, I think, for the overall market, regardless of rotation. I have dialed down a lot of my exposure in tech and semis, and I'll wait for confirmation, wait for something. The levels that I talked about for value areas are good points, good pivot points to watch, and then if that happens, that's going to be the first thing that happens. And the next thing, look for an MACD crossover, look for a stochastic crossover, for a swing trade alert. And as I say quite regularly, I would rather be a little late and wait for confirmation than be early and wrong. So I would rather be a little late and correct versus early and wrong. All right, so I'm not going to go through all of this. This is just talks about the strength of the sectors. You know, this is all in the weekend newsletter that subscribers get, as well as the performance from last week. We've already talked about the rotation that we saw last week. The other thing that is evident here is I mentioned outflows in U.S. equity ETFs. Where did the money go? Right into international ETFs. So they had $5.1 billion of inflows, a lot into developed international markets. You could see that caught the lion's share of the inflows last week. Of the $5.1 billion that went into international ETFs, 3.2 went into developed markets. So names like VEA, where is it? Actually, IEFA caught $3.2 billion of that. I'm sorry, that's wrong. $3.2 billion was the overall number. IEFA caught $2.2 billion of that. Other ETFs in this group, VEA, SCHF, and EFA also saw inflows to make up the balance of that $3.2 billion. Emerging markets still seeing inflows, not as larger than previous weeks, the last few weeks. Same thing with European ETFs. They saw inflows last week, but it's clearly not as large as they saw the last couple of weeks, which were averaging around, I think, around $700 to $800 million the last few weeks. So a little bit of a breather there in that region. Okay, so I didn't shoot a video on this, but one thing that was noticeable last week was what happened in the VIX, right? I don't really trade these a lot. I think there's a lot of flaws with things like VXX and UVXY, SVXY. But one thing that was pretty noticeable last week, what investors did with that big, there's a 55% intraday move in the VIX last Thursday. Again, intraday from low to high, it rose up 55%. So when you look at what investors did, did they pile into the VIX last week with that noticeable uptick? And if I zoom in here, so I've got fund flows on here. So again, what the beauty about tracking fund flows is it's evidence, right? You know exactly what people did, what investors did. There's no two ways about it. There's other people who have indicators and they try to figure out, oh, there was more buying pressure or selling pressure. Fund flows are what they are. It's money going out or money going in. That's the bottom line. It doesn't get any more clear than that. So VXX, what did they do? They took money out. This was the big volume on Thursday. They sold. People who were possibly in the VIX or VXX, they took money out. They took their profits, and it looks like they ran. The number, I'll give you the exact number if I still have it up here. I think I do. Yeah, it was for the week $46 million of outflows, which is 4.5% of the overall fund. Then if you look at, while I have the spreadsheet up, I'll bring up UVXY, which is double levered VXX. That also had for the week, it looks like it was flat, but on Friday there was a $51 million outflow. That's 12% of the fund. So again, just looking at kind of Friday's flows is what I really want to be concentrated on here. What they did after that big rise in volatility on Thursday. And then SVXY, which is inverse the VIX. So this one actually, look at the inflow that this saw. 55% increase in the fund. That's $298 million inflow. Betting that the VIX essentially goes down, or that VXX goes down. So, it wasn't the, because I did see some people talk about, hey, this is the start of volatility going up. I'm not saying that that's not going to happen, but if you look at what people did, they took money out. They took their profits. So this is a red bar here. That's UVXY, and then SVXY. I'll just show you what this looks like in terms of overall. I mean, look at this huge, huge green bar. Again, this is inverse VIX. So this is betting, essentially thinking that the VIX is going to go down. Look at that big green bar. This did the same thing here as well. So people are buying into the fact that we're going to have lower volatility for longer. Every time that we get a spike up in volatility, you could see, so if you've got a pattern here of what happened the last big spike up in the VIX. People went into thinking that the VIX is going to go back down. Could they be wrong? They could certainly be wrong, but I'm giving you evidence here. And that is much better, I think, showing you what people actually did rather than looking at a bunch of indicators and saying, hey, this is what I think this is what I think has happened. In other, indicators that people look at, like volume at price. There's also a money flow that makes a lot of conclusions and kind of goes from there. This is actual, this is actual money, right? So there's nothing is more pure than this. So again, they could be wrong here, but that's what the big money did. They're betting on lower volatility here. All right, so I think that's interesting to point out. Again, it doesn't mean that they're going to be, 100% correct, but it is what it is. So charts of the week. So I mentioned, some of the bad things in the beginning. Again, I think it's important to look at risk for first and dangers of the market. But here's a couple positive things. Transports close to a 52-week high, and very very close to breaking out here. So nice price reaction. A lot of good performance in the rails, as well as the airlines as well. This is what as well as FedEx and UPS last week. IBB. So, there was $2 billion, not last week, but the week before, that went into that went into biotech and healthcare ETFs. And I'll show you this here. You can look at IBB, which I showed this in last week's video, but you've got this big move up, very quick move up. So if you missed this, or if you didn't get all in, you've got a mini pullback. So a retracement of, I'd say, about 33 to maybe a half of this move from the breakout. So there wasn't a huge amount of, it was basically just 1 week where we saw huge inflows. Again, for all of the ETFs, healthcare and biotech, it was $2 billion. Again, I want to stress that because that is a huge number that went into these funds, not last week, but the week before. So, we see a little bit of a pullback here. Watch this pullback zone. I think if I did detail a level here that you can get back involved. Oops, I can't zoom in here. But 313.65, that's going to be your new resistance. And I would watch that to see if we can get a sustained breakout here in biotech. And I like that. Robo, which is the robotics ETF. This is an ETF that I've talked a lot about in 2017. Biggest inflow last week on record for this ETF. And I like where it came in, right at support. So, a break down to the 50-day moving average. The last time it did this was a buying opportunity. Watch the support. Let's see if it holds. Could be another buying opportunity. Certainly somebody thought that last week. Big money going into this ETF last week. Again, this is names like in the US, iRobot, IRBT, AVAV, ISRG, RAVN. Take a look, a lot of Japanese names in this ETF. So if you don't want to play locals, or you can't play locals, this may be a good way to kind of play this theme. This one is on an ETF. This is an index. There's really not a good chemical ETF. You have XLB as in boy, which is the materials ETF, but it's not purely chemicals. I wanted to take a look at this group because they started to tick up last week. And we saw some unusual or some aggressive call activity in one particular name last week, which is OLN. Then I went long. So in the past, when we've seen aggressive call activity in a few of these names, it's worked out pretty well. And I think this is another area that's on support. So I would watch this as well next week to see if it bounces. Here's the chart of OLN. It's got some work to do. It needs to get above the 1500-day moving average. If it does, it could possibly get to the 52-week high in OLN. So there was a crop report on Friday that caused a lot of the agriculture names to bounce. Take a look at what wheat did last week on that report, and also the technicals in wheat. So that was the catalyst was the crop report and the heavy volume. But you look at a multi-year chart here in wheat. And this looks pretty good. We haven't seen the 50-day moving average, which has been below the 200 for years now, is looking like it wants to. It hasn't happened yet, but I would keep an eye on this for a crossover of the 200-day moving average. I would look for a golden cross to materialize here in the next week or two, and then also just watch price above the 200-day moving average. It looks different to me than this these last type of price spikes, which completely failed at the 200-day moving average. So this looks different to me. It's been basing now for about a year, and it may want a higher move here. I looked at a couple other charts too. I look at the soybeans as well. The wheat looks more of a pure breakout to me than soybeans, so I prefer this one here. And then just to kind of look at what else is happening here with maybe a little bit of a reflation trade. Look at what happened last week in aluminum, zinc, and copper. They bounced nicely from the 200-day moving average. I was watching copper a lot last week. This is HG on in Thinkorswim. So this is a weekly chart, but really what I want to look at is the daily chart. So real nice week last week, if we go back to that weekly chart, but it's been in a downtrend, and I really like this move here, getting number one outside of this mini downtrend, and then basing a little bit and then rallying. So we'll see if we can get back to these highs. And I think that would be really good for this group. Things like FCX, names like FCX, Freeport-McMoRan, SCCO. So watch those names. We also have been seeing call buying in the aluminum sector. Alcoa, we saw a couple call buyers come in. Watch that 200-day moving average next week in Alcoa. And then finally, the last thing that we'll look at is both steel names. I actually started along in SLX last week, the steel ETF, as it made its way above the 200-day moving average. Very similar in XME. XME does have steel names in it as well. It's got mining and gold mining as well in there, also above the 200-day moving average. What's more interesting to me than the one-year chart is if you look at the daily chart in XME, the weekly chart in XME, take a look at the support. So this was the break that we saw last year, right? Resistance here. This was in 2016. We kind of came back in, and then some powerful bars that got us way above, and big rally here in the metals and mining space. It stalled out right around 34.81. And then we found some support here for the last couple months. We never really broke into the yearly value area. So this is 2017 value area. Look at all the support here and how it's maintained. And it looks like it might be trying to rally here. I would watch for, it hasn't happened yet, but I would watch for an MACD crossover on the weekly chart. I think we got one last week on the daily chart. We got one last week on the daily chart. Again, this chart is not dividend adjusted, so it's a little bit different. If you factor in dividends, we are actually above the 200-day moving average, but that is definitely an MACD crossover. So it's got a little bit of work to do. I would watch as well short term to sustain the rally 30.24. But I think this group looks interesting. So that's it for today's video. Thanks very much for watching, and I'll see you in the trading room bright and early Monday morning. Thanks very much.